Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to look at a couple of topics. Firstly, how to use the higher time frame DPs with MTPredictor to gauge the large degree trend, and also a look at some losing trades as well, just to remind everyone that it's important to accept losses, but the best thing to do is to keep them small. Which brings me nicely on to our risk disclaimer. And remind you that all examples in these videos should be considered as hypothetical. No trades are actually taken, they're just shown for illustration and training purposes only. Remind you there's a risk of loss in trading and investing. As I just said, we'll be looking at some losing trades in today's video. It's important to know and understand, but more importantly accept that losses can and always will unfold, no matter what trading approach you take. As an example, I'd like to have a look at the YM that unfolded yesterday, which is actually Friday the 14th. So is MTPredictor a black box system where we just take the setups on our chart blindly, perhaps in the direction of our MTP trend color indicator, or is it something different? Well, it's something different, and the reason is because basically markets go in cycles. They have a period when probably half the time the market pattern is unclear. It's like driving in fog, you don't quite know where you're going. So in other words, no analysis should be on your chart. I think that applies to virtually any kind of technical analysis as well, not just MTPredictor. So what do we do at MTPredictor? Well, we look for when the picture becomes clearer, and for this we look for a clear, larger degree trend direction, and for this we use the higher time frame chart. The higher time frame chart is a time frame between 3 and 5 time frames higher. So as we're looking at a 3-minute chart of the YM here, we'd go out to the 15-minute chart. If you're, say, trading Forex on perhaps, say, a 15-minute chart, you go out to the hourly. If you're trading, say, daily stocks, you'd go out to a weekly chart. It's about 3 or 5 time frames higher. Now for this, you'd place DPs on your chart, basically from prior pivot highs and lows. We teach this in our training webinars. So if I perhaps just scroll back a bit, this is our NinjaTrader 8 add-ons, and go back to the last fairly obvious swing pivot high here, and I'd right mouse click, do decision point. Now can you see that's on your chart in advance? So it gives you a leading indicator of potential support, or in this case resistance. So if I see what happened yesterday, you can see the market opened, it went up, it didn't quite hit this resistance area, it came down, it then came back up again, made the high of the day within the resistance area, scrolled back down, and where did it go down to? If I scroll back to that high there, there's our last pivot low, we right mouse click, we do decision point, that is our area of potential support, and as you can see that caught the low of the day very nicely as well. So now we go down to our shorter time frame to see how we could have done some trades within that. Well, if I scroll back a bit, you can see that we had a history triangle here. This was a potential trade setup of this red cell bar. Now this wasn't particularly a good one because it wasn't coming off an important high early in the day. Can you see there? So this is what I mean when the picture's not clear. It's like, what's the large degree trend? Yes, our MTP trend was red at the time, but there was no obvious higher time frame support and resistance that it was working off. So that wouldn't be a good one to take. That was different when we came up into here. Can you see we had history triangles here? These show you that there were potential trades at the time that were filled on the next bar. So if I right mouse click over this red cell bar, do analysis, can you see how this was a potentially good trade because it was unfolding at higher time frame resistance? Our MTP trend had gone black to show that you're in the process or in the area of a potential reversal. Now this was taking you in for a short. Remember, we use correct position sizing in this case to keep our risk less than 2% of a sample $20,000 account. So this would have taken you in short with 6 contracts and then would have stopped you out. This would have been a losing trade. Remember what I said at the start, losses can and will and do happen. So this would be what we call a 1R or 1 risk unit loss. We then got another history triangle up here. I'll do exactly the same here. Now you may well have not got taken into this because the market basically made the next bar and went straight through it before rallying back up again. So you may well have not had time to place this order. So this may not have been a actionable trade. But let's take the worst case scenario. So again, position sizing was used, and this would have been a losing trade. So at this point, you'd have been 2 losing trades. Losses can and will and do happen. So you'd be minus 2R down. We then had another setup. This was a VS setup, again at our higher time frame resistance. I'll right mouse click over this bar, place the analysis on. This time the position sizing would have let you go short 4 contracts. This time it had you short just before the market fell sharply into the first target. At the initial target, can you see how the profit would have been 4R? Can you see that? 4 times the initial risk. So immediately you would have made up for the prior 2 losing trades and put you in profit overall. This is why position sizing is good, because when the profits come through, they're large, not large just in dollars, but in large in relation to the initial risks or the prior losses. So even though you'd had 2 losing trades and 1 profit, the profit would have been more than made up for the losing trades and put you in profit overall. Would you have come out at this DP here? If you'd been more experienced, you might have wanted to run this into your higher time frame support level, which again, remember, was on your chart in advance. So you might well have actually wanted to run that down into that level. If you had have done, that would have increased your profit up to 6.6R. So you would have made a larger profit. What happened after that? The market came down, went back up again, came down, made a VS or volume spike buy. But again, this unfolded at our higher time frame support. So in other words, it was backed by a higher time frame analysis. Let's right mouse click over this blue buy bar, do analysis. Our target basically was way up here and the market never reached it. So if I take this down and see where the profit would have been on close, a nice plus 3.5 or 3.5R. So again, another good trade. Would you have wanted to take this TS4 sell? No, for 2 reasons. First, our MTP trend was blue. Secondly, you were coming off this support zone, so the large degree trend was up. So in other words, a very good day for MTPredictor yesterday, where we would have had 2 losing trades. Remember, losses can and will and do unfold. They always will be there, but those 2 losses would have been kept small at -1R. We'd have then had a short trade where potentially there would have been a +4R profit, or the more experienced users would have come down to the next major support zone and increased that up to +6R. There would have then been another trade here, a long trade up into the close for around about 3.5R profit as well. So a very good day for MTPredictor, where the higher time frame support and resistance zones nailed the highs and lows of the day very nicely for you, and we had some very nice trades within those as well. In particular, our VS sell nailing the very bar of the high of the day there, and our VS buy nailing the very bar of the low of the day there. A very good day indeed. The ES, just have a quick look at the ES. The ES was similar. It didn't have a sell set up earlier in the day, but did have a nice VS buy set up here. Again, there's our higher time frame support zone. Wasn't quite as clean and tidy as the YM, because the market had gone just below it and just back again. But nevertheless, that would have been a nice trade there. Let me just hang on a second. Oh, my mouse is going a little bit funny there. So that would have been into the initial target there for +2.4R. But as with the YM earlier, you may want to run that further. If you had have done, then that could be a nice trade up into the close. But let's say the clearer pattern was on the YM yesterday, where the highs and lows came in right at our 15-minute support and resistance zones. So this would have been the better market to trade. This is what I talk about when you're only trading when the picture's clear. We're not looking to try and force our analysis. We're looking to trade on markets or time frames or pictures where the market comes in and it gives you a nice, clear, clean picture. So it's a very good day for the YM yesterday, and as you can see, we had some very nice trades with the YM working very nicely in conjunction with our higher time frame DP support and resistance zones.